At first glance, the numbers will make you think the sky is falling in the real estate market. Upon more reflection, the data is much more nuanced. But of course, nuance does not get people to click through. But let's get into what happened in Routt County in February of 2023 and see how it all stacks up. Let's begin with the Chicken Little stats. The median sales price throughout the county was $720,000. That is 12% off the $815,000 of February 2022. This is significant in that this is the first overall price drop year over year since October of 2021. Total sales for February dropped 12% as well, going from 59 in 2022 to 52. And with sales and prices being down, we can also expect the total sales volume to be down as well. That's just what we see, a 6% decrease. This year was just over 51 million. Last year, just over 61 million. Going back to the median sales price, this is what people will latch onto as evidence that the market is crashing. Yet, this is the first drop we have seen. This is not yet a trend. And I say yet because I expect the prices to come down a bit year over year. The median sales price in May of 2022 hit its peak at $1,013,000. No one expects it to get back to that, even with the summer sales season. The real estate fever dream we have seen over the past 3 years is broken. But let's continue with that analogy a bit further. When the fever breaks, it doesn't go from 102 degrees down to 88 degrees. It hovers back at around 98.6. People forget that the real estate market was still pretty strong before COVID. Let's consider the monthly supply. How long would it take to sell off all the inventory listed in the MLS? It is 69% higher than it was a year before. It now takes 2.2 months. What people forget to realize is that a balanced market where buyers and sellers are equally leveraged is 6 months, meaning there are still more buyers than there are sellers. And you can see this by the lack of new listings. 45 new listings were taken in February, 34% fewer than last year. Granted, listings are staying on the market longer. Days on market jumped 416% from 6 days to 31, and there are 17% more active listings on the market than last February. So, John James, you say it's still a seller's market. But doesn't that just conflict with what you just said? No, it's regressing to the mean. Remember, it was only last year where we had buyers going up against multiple offers and waiving inspection objection clauses. But with interest rates being 6.75%, a full 2 points higher than last year, buyers are more cautious and less willing to trade off their firstborn to get a fixer-upper. People don't want to buy something they have to do a lot of work on. Their monthly payment is considerably higher, and the cost of renovations is higher because of inflation. You can see that buyers are pushing back against higher list prices. The median sales to list price ratio, the difference between list price and sales price, is off 3.1% from 96.8 to 99.9%. And price reductions are almost 3 times higher than last year, 33 over 10. So again, you pull out a couple of stats and it looks dire and bleak, but let's finish this up by looking a little bit more broadly. And this is fitting since we are now officially 3 years after 15 days to slow the spread. Do you know what the median sales price was for February 2020? $462,500. Meaning by doing nothing but living in your home for the past 3 years, the equity in your home has increased 34%. Meaning you are much more liquid selling now than you were 3 years ago. And on the buyer side, we've gotten away from that completely unsustainable high prices we saw last year. Yes, the interest rates mean you will be paying a little bit more than you would probably like, but that is short-term problem, which can be remedied when the interest rates come back down and you can refinance. So the only thing falling from the sky right now is Steamboat in snow. Keep an eye out for more updates on this channel. Until next time, take care.